Well, we are taking a closer look at that market action with Robert Towell from Sasfin Securities. Thank you so much for your time, Rob. Now, as expected, the Fed keeping interest rates unchanged last night, but really the real sentiment driver there was always going to be the tone leading to the September meeting. What did you make of that?
I think it was correct in saying that everybody does think that September will be a rate cut. Powell indicated that that could be the case. He didn't say it directly, but I think that after he spoke, everybody does believe that there will be an interest rate cut in September. Then also we're waiting for the UK today. They might come out a little bit early and cut rates already. So I do think that it's going to be multiple rate cuts across multiple different reserve banks across the world, or starting from this month all the way through to September. So I do think it's positive for equity markets going forward. And we'll just have to wait and see if the States actually does that. 0.25%, I think it's already in the market. It's priced in already. So if it didn't happen, I think there would be a surprise. And if it does happen and it's 0.25, I don't think the market will move too much. I think the market's already priced it in.
BOE, what exactly are markets pricing in there? Or is it maybe a little bit of a split in terms of expectations?
I think they have. On the equity side, definitely, I think that you've seen money flow into the smaller Russell in the States and the smaller companies that have got more leverage. So you're starting to see that switch come through into the market. So I think the markets are expecting rate cuts. And obviously, companies that are going to benefit the most from lowering rates is where the money is starting to flow. So you're starting to see that already, that it's getting priced in straight away.
Yeah. We're talking about sectors that will benefit from a decrease in interest rates. The tech sector, Meta came out with quite positive numbers there. We did see a positive reaction from the market. I mean, just looking at the fact that investors at some point were worried that Meta was spending too much money on the metaverse. Do you think that at this point, the stuff that they've done puts them on a solid, sustainable footing going forward in terms of like the nips and tucks that they've done there?
I think they're a very good set of numbers. Quite a few of the big techs have reported. They've been one of the better ones. Even though you started to see, Microsoft had numbers of 29%, but it missed expectations, so it came down a little bit. But Meta, really good set of numbers. Going forward, they seem to have their costs under control, and they're still generating revenue. So they're still one of the first that are starting to generate revenue from their AI spend already. That's not huge amounts of revenue, but the others are still spending money and not getting the revenue back from the spend. So Meta is a little bit more advanced, and they're a little bit ahead of some of the other tech companies. And they've got a good diversification of businesses, whether it's from WhatsApp to Instagram, and then obviously Facebook itself. They've got a very good diversified business. So a very good set of numbers, and you saw the share respond very positively to that. And they're not overly priced. I mean, I think their PE ratio, if I'm correct, is around 19 to 20. So it's not like they're overpriced. They could easily re-rate and go up again. So, if we start to see interest rates coming down and you continue to see a little bit of growth in AI, I think the share can carry on moving up.
All right. Well, let's go into alcoholic beverages. AB and Bev, they're coming out with second quarter results today, revenue increasing by almost 3%. We did see a slight decline, though, in those volumes, but core profit, they're posting double-digit growth. How did you digest those numbers?
Well, it's a very mature business. There's not too many more liquor products coming out that are new. We started to see the move into low alcohol beverages and mixed beverages away from beer and pure spirits. And they're still mainly on a pure beer side, on that side. So, they've battled over the last few years with a very large debt amount. They've been bringing that down. So a very fair set of numbers, good set of numbers, but it's not a growth company. It's something that you have in your portfolio. You'll get some dividends from it, and maybe you'll get some special dividends as they bring their debt down. The Olympics will be good for them this year as well. Hopefully they'll get more beer throughput going through during the Olympics. So a good set of numbers. They've done a lot to the business to correct spending. But beer is not a growth industry, so a good business and a good set of numbers. But it's something that we're not looking at right now. to add to portfolios.
Well, talking about special dividends, Mondi declared a special dividend, of course, in posting its interim results today, saying that underlying core profit did decline, but also citing a better market conditions and more of an ability to implement price increases. Would you say that the environment is more supportive, but also why is it really not filtering down through to EBITDA growth?
Well, I think in the last 6 months, the paper in general across all industries has been a little bit subdued. So that's why you've seen some earnings coming down. I think on the positive side, the special dividend is a very big special dividend, and they were making a play to buy Smurfit overseas. It was a very big purchase for them, and that fell through. So I think that cash that they had in reserve is what's coming back to pay that special dividend. So I think the market likes that. But it is a capital-intensive business, and obviously you have to get their mills running at the right levels, etc. And that's what's keeping some of their earnings at bay while they gear up on some of their mills, etc. It's high cost, and then you have to wait through for the paper prices to increase and go forward. But they're very well balanced paper business. A lot of it is packaging and container as well, not graphic paper like Sappi has. So it's in a good sector of the paper market. They're starting to get a little bit small compared to their competitors. That's why they try to buy Smurfit early in the year. But a good set of numbers in general. But the paper business does need general GDP around the world to move up. And so I think the special dividend is nice, and that's what's keeping the share more or less level. I think if that special dividend wasn't there, you would have seen a drop in the prices after these numbers.
We'll talk about something that the markets didn't like is ArcelorMittal. The markets actually haven't liked this one for a while because they just keep on coming back with the bad news. So they released interim results today, revenue down 3%, and then you had that headline loss per share widening by 150%. Of course, last time I checked, that share price down almost 4%. Is there no relief in sight at this point, as you also talk about how we need better GDP growth globally for some of these companies to really thrive?
Yeah, so there's two things. First of all, there's an overcapacity of steel around the world, and China's exporting a lot of cheap steel around the world, so that's putting pressure on Arcelor itself. And then, for big industrial use of steel, our South African economy is just not producing enough building and infrastructure spend to use the steel. So the projects that are using steel are importing cheap steel from China, so they need tariffs to come in. There were tariffs added later in the year, but I don't think that's come through in these numbers yet. So they've got a double whammy: extra low steel price worldwide, a glut of steel, and not enough infrastructure spend in South Africa. Will it change over the next 6 months in South Africa? So far, it looks like it could. The GNU is working. It looks like there is a little bit of flow on infrastructure projects, and we really need that for Arcelor to improve. But their factories are really old, so they really need a lot of throughput to reduce costs in those factories. So a poor set of numbers, and not yet time to buy.
All right. Well, what are you buying today, Rob?
I've stuck by FirstRand over the last couple of months. They've had a really good rally. I think they'll trade in around 65 Rand, they're now 81. But I still think the South African banking sector is going to have a positive 6 months to 18 months going forward. And I still think that on a valuation level, there's still more upside in the bank. So FirstRand is still what I'm looking to buy. And I think that you've still got upside, and you've got a really good dividend coming through from the banks as well.
All right. Well, thank you so much for your time and for your analysis on what is currently moving investors' money in today's trading session, Rob. That was your midday market update with Sasfin Securities' Robert Towell.